Well, you might have heard over the weekend that there's a lot going on in the banking industry right now. And there's some people who are a little afraid of what's going on. I want to tell you a little bit about the situation, but first I want to tell you, hey, there's not a thing to panic about, but there may be some things that you're going to want to do. If you haven't been following this, there is a bank on the West Coast called Silicon Valley Bank that the regulators shut down Friday. And over the weekend, the FDIC came in and assured that all the depositors would get all of their money. So that's a good thing. There was another bank that was closed this weekend as well from New York. And there's been a lot of reverberations in the market about this. So a lot of people are afraid of bank runs because what happened to SVB was that they had a run on the bank. And that's when everybody's looking for the money. And if you don't know it, your money that you put into the bank is not actually there. They lend that out to other people. And it's kind of like a confidence game in a sense that so long as everybody has confidence that they can get their money and they don't go run and get it all at the same time, the bank is good. We don't want to have runs on a bank, right? And I think the government has jumped in this weekend to make some things right, which was good. I personally think, I've been following this pretty closely, it's probably a little worse than what they're telling us that it is. I think there's going to be some more banks that close down. I doubt if it'll be many, but I do think there will probably be some. So it's nothing to worry about necessarily. I don't think it's going to be like a Great Depression situation, but we want to be aware. And here's the main thing you want to be aware of. For your business or your personal life, every bank or FDIC provides every bank account $250,000 of insurance, meaning if you have $250,000 or less in any bank account that's insured by the FDIC, even if the bank goes belly up, the FDIC will make you right, meaning you'll get your money is safe under $250,000. But if you have a business, you might have a whole lot more in there. And let's say you have $10 million in a business checking account, still only insured up to $250,000. So you have a lot more in there that would be uninsured, and that could be at risk. Now, just so you know, on the Silicon Valley Bank situation, people who had more money in did not lose their money because the government came in and extended that insurance effectively. So nobody has lost any money in that situation, but you don't want to be in that situation. So the idea is to keep less than $250,000 per account if you can. But for example, if you have 10 million in your business account, that would require 40 bank accounts. And that's a lot to juggle. It's a lot of accounting. So there are some ways to make that a little simpler for you. There's something called the Cedars program, which is where basically your bank would spread your money around in CDs to a lot of other banks. So out of that 10 million, they would take $250,000 chunks, for instance, and put it in different banks so you have more insurance. So it's a good time to look at your bank to see, are you comfortable with the quality of your bank? Number one. Then number two, do you have a situation where you can sleep at night? That is the big deal. So make sure you have insurance to the level that you're comfortable and know what you have. And number two, make sure you're comfortable with your bank. It's a good time to take a look at that. If you're uncomfortable with your bank, maybe this is the time to change, to leave. But as I said, there's nothing to panic about, but there may be some things that you're going to want to do right now. And don't be surprised in the weeks ahead if we don't see a little more volatility in the banking world, as well as the overall financial world and stock market as well. Have a great day.